Friends, we will make a beginning with the financial management. Of course, in your PCC and IPCC, you have got two management. One is financial management, another is the strategic management. And with respect to the management oriented subject, the problem is not in understanding, to a greater extent I can say, but the problem is in remembering the things. How do you remember the things or the concepts that you learned is the biggest challenge, because unlike the other subjects, management oriented subjects are more dynamic. Rest of the subjects I can say are static subjects. Audit, to a greater extent, static. In what sense? These are more of a procedural things. Whereas in a management situation, all what the principles you learn in a classroom environment like this cannot, as it is, how they are, cannot be applied. You need to first understand under what circumstance, what principle of the management you have to adopt. That's where the whole lot of challenge according to me. And most important here is feeling for the situation. That is also most important. Learning a concept, you will be able to learn it only when you have got the feel for that situation for which that concept is. Of course, we make an effort to see that you get some practical feel of it, but more than what my effort is, it is the student's effort as to how to understand these concepts. So in that connection, if you open your mind, there is a chance for me to put the concept in your mind. If the mind is a closed mind, the management subject cannot be put into your brain. So now, to tell you about financial management and what the syllabus we have, what is the paper structure and all. Now both in PCC and the new scheme of integrated PCC, you have the same syllabus, and the relevance of the marks is also the same, like 50 marks, costing 50 marks, financial management 50 marks. Now, from the paper point of view, 40% of the paper should come by way of theory and 60% will be problem section. Here, when we talk about financial management, we can also, for learning purpose, can say this is more of a balance sheet management. Why I am saying it as a balance sheet management? All of you know that the balance sheet can be brought into three parts. What are those three parts? Sources of finance, application of the money which you raised, and the working capital. How I am trying to make balance sheet into three parts? Like my fixed capital in the form of equity share capital, preference share capital, reserves and long-term fund loans. That and all I call it as a fixed capital. On the other side of the asset side of the balance sheet, the fixed assets and investments is to be kept as one part. And the current assets less current liabilities is a working capital. So your syllabus, how it is being structured. like three important topics you have. One is working capital management, which deals with current assets and current liabilities and each individual item. What are the issues associated with the management that we are going to study? Working capital management. Then we have a topic called as cost of capital, capital structure theories, how to raise the capital and what capital is subjected to what risks and rewards. This and all I am going to discuss in the capital structure and cost of capital. Then the game is not over in your raising the capital. The game begins there. How effectively you utilize the funds. The technical name which I am giving is a capital budgeting, investment decisions. Yes, in the CA Inter, the PE2, the topic name is capital budgeting. Here the name is the investment decisions. Basically, these are the three major topics in the financial management. The other subtopics you have here are, you need to study the concept of leverage. You need to study tools of financial analysis, ratio analysis, cash flow and fund flow statements. And you need to understand what is the basics of the financial management. And then you need to study the sources of finance, that is in the domestic financial markets how you can raise the funds, and in foreign financial markets how you are going to raise the funds, what are the different instruments, financial instruments, the newly evolved financial instruments, their features, all these things we are going to study. This is an overall comprehensive view of what is there in the financial management for you. So to make a beginning, let us study for the day the basic concepts involved in financial management. Scope and objectives of the financial management. First question is, what do you mean by financial management and what are the basic aspects of the finance function, and explain them. Right. Friends, try to understand what do you mean by financial management. Simple story. What is it? In financial management, the whole lot of thrust is on what? How to raise the money at a lower rate of interests. How to make the investment of this money and at which places you have to make the investment so that return out of what you invested is more than the rate of interest that you are paying on the funds which you raised. So that out of others' money you are going to gain. What is the primary objective of any finance manager? To increase the wealth, to increase the profit, to increase the value of the equity shares and the equity shareholders. This is what the primary objective of any finance manager, and he need to do all what he can do to achieve this particular objective. What is the principle of financial management? Don't do business with your money. Do the business with others' money and make profit and give them their due share and get your own share. Rishita has got 10 lakhs. She don't know what to do with the 10 lakhs. Chakravarti has got an idea. He takes that particular 10 lakhs by saying that, Rishita, if you put in the bank, you get only 8%. You give it to me, I will give you 12%. But Chakravarti can say like that and can take the money from Rishita when? Only when Chakravarti is confident of investing this money at such a places where he gets 18% of return. So that 12% even if it is given to Rishita on her funds, I can make 6%, the gap between 18% and the 12%. Of course, I am oversimplifying the whole lot of issue, but fundamentally the issue is the same thing. How to raise the money at lower rate of interest and how to invest the same at such places where we get higher rate of interest, thereby in that process equity shareholders wealth and profit and value gets maximized. So any decision as a finance manager you take ultimately should result in what? The wealth of the shareholder should get increased is the point. So have a look at, there are different definitions given by the authors about the term financial management, but most acceptable definition is given by S.C. Kuschal. Is that financial management deals with procurement of the funds and their effective utilization. Yes, there are two things that you should remember. Financial management involves all what? How to procure the funds and how to make effective utilization of those funds which you raised. Any area inefficiency is there, you are lost. You are effectively investing, but you are procuring the funds at a very higher rate. Then the margin that is available to you is very less. Or you brought the funds at lower rate of interest only, but you kept them idle. Then also you are lost. So what is it? Financial management involves with procurement of the funds and their effective utilization of the business. In simple words, S.G. Kuschal told the entire financial management in a one sentence by saying that entire financial management deals with the procurement of the funds and their effective utilization. So thus there are two main aspects of the financial management. One is procurement of the funds and second one is the effective utilization of the funds to achieve the business objective. Now to start with, in procurement of the funds, how many issues are there? First thing is, funds can be obtained from various sources. What are the sources for raising the funds? You can issue equity shares, you can issue preference shares, you can issue debentures, you can take the term loans, you can take the overdraft facilities. Of course, overdraft facility is a working capital situation. Other than bank overdraft, rest of the things are all long-term funds. So these are the different ways of procurement of the funds. Then the other important thing is different funds which you procured comes with different characteristic features. When we say characteristic features, what are the characteristic features? Cost, risk, control. Every source has got these three characters: cost, control and risk. So it is essential to have a proper balance between the risk and the control factors. So the business entity should ensure that cost of the funds should be minimum. And the procurement of the funds involves following: identification of source of fund, from where the fund you can get, what should be the mix of that particular funds, how much should be in the equity shares, how much should be in the preference shares, how much should be in the debentures. That's what we call when we say financial mix, and then raising the funds. And procurement also can be made out of self-generated funds. Once the profits are coming, without distributing the same as a dividends, if you retain those profits, that is also going to become another source of the fund. Then effective utilization involves what? The finance manager of the business entity is responsible for not only for procurement of the funds but also for their effective utilization. Funds are procured at a cost. Please remember this thing in your mind. You please always keep in the mind that फ्री में कुछ भी नहीं मिल रहा. जो प्रोक्यूर करे उसको एक कास्ट है, तो उसको आइडल लगाना बोले तो मीन्स व्हाट? You are accepting for a loss and you should not do that. So the point here is funds are procured at a cost, thus it becomes essential to employ them profitably. So finance manager identifies where the funds remain idle and the reason for the non-utilization of the funds. Continuously he should make an analysis and see to that funds are effectively what you call invested. He analyzes the financial implication of each decision, investment in the fixed assets, the need for adequate working capital. After funds are getting raised, one should think of how much to be invested in the fixed asset, how much is to be made available for working capital purpose. This is also a decision by itself. Now, of course, where the point is to be elaborated, there only I am trying to do this, because this is more of an intensive crash and crush. Other way around, the cost, control, risk factors can be well explained in the first question itself. But we have a detailed question here in the form of the second question: what are the various aspects of consideration in the procurement of the funds? So, first question made us to understand that there are two aspects. One is procurement of the funds and their effective utilization. And in procurement and effective utilization, what are the issues involved, we have well understood. Now, having understood that, now you please tell me, in procurement, already you studied that each type of the what you call capital has got its own character. And what are the three characteristic features? Cost, control, risk. So what are the various aspects of consideration in procurement of the funds? So the consideration in procurement of the funds are risk, cost, control. The considerations differs with the type of the fund, and an analysis you can make like this. First, friends, try to understand before we get into this analysis. Understand what do you mean by costs? What do you mean by risk? What do you mean by control? To start with costs, a layman understanding of the cost and the understanding of a student who completed the cost accounting differ from what the understanding you need to have with that word costs. So far your understanding of the cost is what? Cost is the amount expended for acquiring a particular thing or service is called as cost. But cost in the context of the financial management is what? Cost in the context of the financial management is the expectation of the investor. Expectation of the investor, you call it as a costs. That is what the investor is expecting about the return out of his investment, that is what we call it as a costs. Then what do you mean by risk? What do you mean by risk? Of course, risk again at a later point we will be studying. Risk can be classified as financial risk and operating risk. But at this juncture, simple understanding of the risk try to get into. What do you mean by risk means? See, if you rely too much on debt funds, what will happen? Even if a small fall happens in the sales, consequently a fall happens in the profits, then that by paying that particular interest, what will happen? Shareholders may be running in losses. That is one type of risk. Second thing is risk of the investor asking for the repayment of the money. Risk of the investor asking for the repayment of the money. These are the two risks. Risk in the situation where profits are not available, still you are supposed to pay. Second, risk of the other bringing a pressure on you to make the repayment. Then control क्या चीज है? If you are thinking of raising the funds, if you raise the funds by way of debentures or loans, the existing shareholders' control over the concern will not get diluted. But instead of raising the funds by way of loans and debentures, if you raise the funds by making further issue of share capital, तब क्या होता? Existing shareholders' control over the company will get diluted. So further issue of share capital will have diluting effect on what you call existing shareholders' rights. This is what when we talk about control. So now to explain you about these three characters on different types of the funds. To start with, first, risks. When we talk about the risk, with equity share capital, the risk is less. Why risk is less? That is, poor equity shareholder, unless the company has got profits, he will not look at the dividends that he is going to get. Poor equity shareholders also know that during the lifetime of the company, they are not going to get back their money. If at all they want their money, they have to go to the secondary market and make sale of these shares to somebody. But they cannot come and make a dharna before the what you call company asking for the repayment. So the question of asking for returns or asking for repayment is not there with the equity shareholders. Only when company has got profit, equity shareholders are to be paid for the dividends. On that context, the risk associated with the equity share capital is less. So, low risk. The risk is low as there is no question of repayment of the capital except when the company is under the liquidation. Hence, it is the best option from the point of view of the risk. Right? Equity share capital is like a wife of a family. Right? Risk is very less. जितना तुम कमाते उनसे अंदर ही उन्हों खर्चा करते and day in and day out she will not say that you are a waste fellow. Right? Risk जहाँ पे कम होता, other pressures will be more. I will tell. I will come back there. Right? But in my opinion, equity share capital from the company's point of view is like a wife only. Right? Next aspect. As far as loan funds are concerned, high risk. तुम्हारे पास प्रॉफिट है या नहीं, हमको दे दो. क्या देना? Interest देना ही देना. और as per agreement, whether you have got liquidity or not, make sale of your fixed assets and give back our money. So in that context, loan funds have got a higher risk. So the interest amount has to be repaid irrespective of the performance of the company. And then of course here I am only viewing only two types. One is equity. Equity includes equity share capital, preference share capital plus reserves. Second type of funds I am looking at is the what you call loan funds. So from the risk point of view, equity has got a lesser risk and loan has got a higher risk. Then cost point of view, Cost means what? Expectation. Expectation of the equity people will be more. Poor debenture holder, तुम interest पे करे सो तो बस happy हो जाता. He is not bothered about what the profits you are getting. But equity shareholders ऐसा नहीं. तुम्हारे पास जितना प्रॉफिट है उतना पूरा डिस्ट्रीब्यूट करते क्या, वैसा देखते वो लोग. They don't allow for making further investments into the business. आज का क्या हुआ, हम जितना है पूरा दे रहे. और एक्सपेक्टेशंस आल्सो ऑफ द इक्विटी शेयरहोल्डर्स कैसा रहता, ये साल में 10 लाख कमाए, नेक्स्ट साल विल चक्रवर्ती अर्न 20 lakhs, नेक्स्ट साल चक्रवर्ती अर्न 20 lakhs. Expectation further grow. Yes, like that expectation will go on. Yes, I already educated at the house by saying that no, I have taken the money of others. Yes, you did a beautiful job. Suddenly in 1 year losses came. Who asked you to foolishly go and borrow the money? Our own money you are not able to properly rotate it. Why you are taking others money? अब तक भी मैं वही करे, अब तक तुम वही करे, मैं नई क्वेश्चन करे, क्यों नहीं करे? क्योंकि तुम दूसरों का पैसे यहाँ पे रोटेट करके हमको घर को क्या लाए, ज्यादा प्रॉफिट लाए. That is the reason why we have not told anything. Now since today loss is coming, we are saying that क्यों ऐसा काम करे, ऐसा रहता इक्विटी शेयरहोल्डर्स का स्टोरी. तो पॉइंट क्या है, कॉस्ट, एक्सपेक्टेशन, रिस्क कम है मगर एक्सपेक्टेशन ज्यादा रहता इक्विटी शेयर्स में. इक्विटी शेयरहोल्डर्स का expectations will grow. Naturally, dividends are getting increased means what you call, this year I gave as a finance manager 14% dividend to my shareholders means next year shareholder will be waiting for, will Chakravarti by managing properly, is he going to give me 18% dividend? 14.5 दिए तो भी उन्होंने बोलते बेस्ट फेलो, 13.5 दिए तो चले जाओ यहां से. हाँ, वैसा चीज रहता. तो कॉस्ट क्या है, कॉस्ट का मतलब क्या हुआ यहाँ पे, ट्रू कॉस्ट नहीं, एक्सपेक्टेशन है. इन द कॉन्टेक्स्ट ऑफ द फाइनेंशियल मैनेजमेंट व्हाट इज कॉस्ट? कॉस्ट इज द एक्सपेक्टेशन ऑफ द इन्वेस्टर, इज कॉल्ड एज द कॉस्ट. सो cost wise equity shares are very expensive, and moreover that dividend is not an deductible expense to reduce my tax liability, whereas interest is a charge against the profit and loss account. It will reduce my taxable profits, so also my tax burden also will come down. So the point of interest is equity shares, they are expensive. Why you are saying it as expensive? Dividend expectations of the shareholders are higher than interest rates. The dividends are not tax deductible, whereas your debenture interest and all will reduce your tax burden. On that context, we say dividends, equity shares are more expensive than compared to the dividends. Then, of course, loan funds are cheaper because prevailing interest rates are considered only to the extent of after tax impact, because interest has got a tax reducing effect. Even if I am paying 8% interest, if prevailing tax rate is 50%, means the effective interest that I am paying is only 4%, because 8% interest when I am debiting the same to my profit and loss account, my profit got reduced, on that my tax burden also got reduced. So effective interest rate will get reduced in the presence of the tax impact. Then I move to the next aspect called as control. Control, in case further you are going for issuing of the equity shares, the existing equity shareholders control over the company will get diluted is the point. Whereas if debentures are issued, there will not be any dilution of control of the existing shareholder. by making further issue of the loans or by making further issue of the debentures, the existing shareholders control over the concern will not get diluted is the point. Like that, what we understood by reading this question, that each type of capital has got three characteristic features. Those three characteristic features are cost, control, risk, and you have to properly understand what are these three things with reference to a particular capital. To sum up the whole lot of discussion so far, we made that with respect to the equity share capital, the risk is less because repayment happens only on liquidation. Cost expectations are more with to the what you call your equity shareholders cost concept wise, equity shareholders cost is more. And then control, by making further issue of the equity shares, control gets diluted. Whereas with respect to the loan, risk is more because the repayment of interest is to be, payment of interest is to be made whether profits are there or not, and on due date whether you have got liquidity or not, you have to repay it. Cost wise, because of fixed expectation, cost is less. Moreover, since interest is a tax saving item, it has got a lesser cost. Coming to the control point of view, it will not dilute the existing shareholders' control over the concern. Then friends, I move to the third question. What is the scope and the significance of the financial management? When we say, or when we discuss any subject, we say that subject itself is a subject and all other subjects are existing only because of that subject. Like that, we should be able to argue. But friends, please remember, financial management, without finance there is no organization. Money के बिना कुछ भी काम नहीं होता. तो primacy, universality, these are all the features of the financial management. So what we are saying, primacy, the strength of the finance function determines the strength of the other functions. Other functions' strength depends upon the finance function. What are the other functions? Production function, marketing, etc. There, those functions' strength depends upon the sound financial management. Production manager want to produce, money is not there. नो क्या करते, जितना भी एक्सपर्ट हो बैठना बस. Similarly, what you call marketing manager has got lot of plans, marketing plans, sales is to be increased, accordingly he expect the production manager to produce, but production manager comes to the financial manager, no money, gone, good idea is also gone. So basically finance function is a important function. Once finance function is strong, other functions also will be strong. Hence financial management guarantees the survival of the business and constitute a primary place in the managerial attention is the point. So be happy. You are all chartered accountants who are going to involve yourself in that primary function of the finance function. Don't feel bad for not becoming MBA marketing or production engineers, because they all comes after finance manager. First person who works is the finance manager. Pervasiveness, universality, that is financial management is needed for all types of organizations. Whether you are a production, you are into production activity, or you are into service activity, you are into trading activity, or you are a non-profit organization also, you need to have the proper financial management. So financial management is needed for, not that only this organization requires financial management, that organization don't require financial management, like that not there. All types of organizations requires the financial management, whether they are profit motive or non-profit motive. Necessity. Financial management is essential wherever funds are involved in a centrally planned economy and also in a capitalistic setup. It attempts to use the funds in most effective manner, that is optimizing the output from the given input of the funds. It focuses effective utilization of the most important resource, money. Effective utilization of the resources is required for success of any organization. And what is the one most important resource for the organization is money, and money is also in scarcity. Always in economics also, what you studied and came here, resources are limited, wants are unlimited. Within the existing resources only maximum utilization has to happen, so that maximum what you call satisfaction you can derive. So money is the most important thing, and the financial management will discuss, will think about effective utilization of that scarce resource called as money. So the financial management need is so much. So like that what we said, financial management is a very big subject, and its scope is completely spread, whether it is a profit making or non-profit making, right? For other functions to work with sound, you require a sound financial management. Got the point? Now we move to the most important question from the examination point of view, which is repeated n number of times. Profit maximization and wealth maximization are what are the objectives of the financial management. So what are the objectives of the financial management? The objectives of the financial management are, number one is profit maximization, number two is the wealth maximization. See, when we say objective, Mr. Aditya, what is your objective at this point of time? Passing CA. So all your thinking should be what? All the decisions that you make now aims at what? Achieving that objective. Isn't it or not? So when we say objectives, we have, our thinking should be, all our decisions should be to achieve only that objective. Like that only finance manager takes several decisions. For all those decisions, the guiding factor should be the objective. So what should be the objective of the finance manager? First, initially is the profit maximization, later it is wealth maximization. Of course, before we get into the what you call the answer, let me generally explain this concept of profit maximization and the wealth maximization. See, today I started the business, let us suppose. I cannot think tomorrow itself XYZ is working with me. Let us first construct the what is it? Employees' quarters. Is that should be the first priority? No. First priority should be what? Have good production facilities, have good marketing team, have good production team, and search for the good clients, and then make the profits, then see the welfare of the employees. Undoubtedly, welfare of the employees is one thing that you have to do, and that will increase your goodwill also. Tata Birla, who started 100 years back, constructed the what you call employees quarter. So Chakravarti, who started now, also think about constructing the employee quarters. हो जाता वैसा? बिरला यहाँ बिरला मंदिर कंस्ट्रक्ट करे, एटलीस्ट लेट अस कंस्ट्रक्ट ए हनुमान टेम्पल बोल के करे तो उन्होंने कब करे वैसा? आफ्टर ग्रोइंग इन द लाइफ टू ए पर्टिकुलर लेवल, तब सोशल ऑब्जेक्टिव्स वो सब आना. और all safety measures are being there in the Tata company. Let me also have all safety measures. Safety measures के लिए ही 10 लाख खर्चा करना, मेरा टोटल कैपिटल है 15 लाख. हो जाता है ऐसा? नहीं होता. तो जब भी आप डिसीजन लेते, वो डिसीजन कैसा होना? It should help you to make first profit, because undoubtedly you have got social objectives, social obligations, but as you grow you should meet the social obligations. I see in this particular confusion in some of the youngsters. Father and mother are very helping people to the society. The small kid 18-19 years रहता हूँ, उन्होंने भी चैरिटी में इन्वॉल्व हुआ. पहले पढ़ना, बाद में पोजीशन में आना, बाद में चैरिटी करना. ये नहीं सोच रहे हैं मेरा फादर चैरिटी कर रहे हैं, मैं भी चैरिटी करूं. हो जाता है ऐसा. इसके लिए उन्होंने स्टडीज बंद करके व्हाट यू कॉल एम्प्लॉयमेंट में जाके ऑर्फन्स और इन लोगों को हेल्प कर रहे हैं, ओनली टू फाइनली बिकम ऑर्फन. Try to understand the point. First, your hands must be strengthened before you help others. Similarly, in a family hold also, 2 sisters, 1 brother. How the sacrifice story starts, you just see. Brother क्या सोचते, अच्छा पढ़ना हमारा महीना बोल के इन्हों पूरा काम घर का सफाई से स्टार्ट करके पूरा करते. बाद में इन लोगों चार्टर्ड अकाउंटेंट्स बन के, उनको स्टडीज में इंटरेस्ट नहीं है उसको, इसीलिए उनको स्टडीज नहीं आए. तो मेरा बोलने का क्या मतलब है बोले तो, जो क्या करना, इन व्हाट एज व्हाट यू हैव टू डू, व्हाट इज प्रायोरिटी, अंडरस्टैंड दैट प्रायोरिटीज, राइट. And some students, today is a result day. A fellow will come and say, sir, this is my last attempt. If the result comes, I will continue. Otherwise, I will go for the job. I don't want to become burden to my father. क्या है? For 21 years, poor father, without the questioning you, has fed you. After all, poor father, what is his expectation? That you should come up. Just because he asked, बेटा क्यों अच्छा नहीं पढ़ रहे, तुम क्या बोलते? अरे हमको भी इंडिविजुअलिटी आया सर, why we should be burden for them. क्या बर्डन है भाई, तुम बड़ा बड़ा बात कर रहे हैं. वो सब बोले तुम्हारा फादर, नहीं सर इनका मीनिंग वही है. नहीं सोचना. तो ट्राई टू अंडरस्टैंड, don't get confused about the aspect of profit maximization and wealth maximization. इनिशियली प्रॉफिट मैक्सिमाइजेशन ही होना, बाद में कुछ सोशल सर्विस करके गुडविल बना दो, इससे तुम्हारा मार्केट वैल्यू ऑफ द शेयर भी वैल्यू बढ़ जाता, ताकि वेल्थ ऑफ द शेयर होल्डर्स विल गेट इंक्रीज्ड. इज द पॉइंट. इट्स अ ट्रैवल, not one shot you achieve that particular what you call wealth maximization objective. It's a travel by itself. And in that travel, render good services, quality services to the what you call society, so that society will put a good value for your shares. In that process, your wealth maximization happens. So any decision as a finance manager you take, your objective is to achieve the profit maximization and the wealth maximization. It's a general explanation. Look at the specific explanation. That is, as per the traditional approach, objective of the business entity is to earn the profits. The finance manager is to make a decision to maximize the profits. Profit maximization as an objective has the following advantages and disadvantages. advantage. It is a must for the survival of the business, or else capital employed is lost. If you don't have profit maximization as an objective, क्या होता तुम्हारा charitable trust बन के पूरा capital चले जाता. तो इसीलिए you must first strive for survival of the business, else capital employed is lost. Second thing is, profit maximization is essential for growth and development of the business. And then positive impact on the society. Yes, once you grow, क्या होता? You will give employment to many people. Once you give employment to many people, what will happen? Purchasing power will go up. Once purchasing power goes up, what will happen? Demand for the products will go up. Once the demand for the product goes up, what? More companies will come. More companies means what? More employment. More employment means what? More purchasing power. More purchasing power means what? More demand. This is all positive cycle. What is it? Positive impact on the society. Or profit making firms can only pursue the social objective. कौन कर सकते? मेरा intention नहीं. Always intention is not alone helps. The ability is also the deciding factor. I have got very good intention. उनसे क्या होता? तुम्हारा ability क्या है? To carry out that intention, तुम्हारा ability क्या है? वो भी deciding factor होता. तो only profit making firms can go for the what you call meeting the social obligations. Now, from the disadvantages point of view, what we are saying, the term profit is vague. It does not convey whether it is a long term or a short term, or a rate of profit or a total profit. What it is. So it is a vague term. When you talk about profit, is 1 lakh profit is correct or 50,000 profit is correct. In isolation, you cannot decide it. What is the capital employed to earn the 1 lakh profit? What is the capital employed to earn that 50,000 profit? Then again the discussion is the rate of profit is the matter, or the quantum of the profit is the matter. So in that way, what we are saying, the term profit is vague and it ignores the time pattern of the return. When I say it ignores the time pattern of the return, what does it mean, friends? I have got two decisions, two things, two options. I have to take a decision. Which option I have to go about? In first option, I have to what you call invest 10 lakhs. In second option also, I have to invest 10 lakhs. But in first option, I will get 5 lakhs in the first year, 6 lakhs in the second year, 7 lakhs in the third year. 5 plus 6 plus 7, kitna? 18. In the second option, I will not get till 4 years nothing. In the 5th year, I get 10 lakhs, 6th year 20 lakhs, 7th year 18 lakhs. If you see only from the total profit point of view, second option may be correct. But if you consider time value of the money, what the present money has got the value, what the future money will not have the same value because of the inflationary effects. So if you only look at the total profit point of view, second option may appear to be good, but like that if you take a decision, that means what? You are only concentrating on the total profit, but you are ignoring the time value of the money is the point. Then ignores the social and moral obligations of the business. Yes, profit बोल के आप डिसीजंस लिए तो प्रॉफिट के चक्कर में sometimes you may ignore the social and your moral obligation. 1 liter milk में 100 ml वाटर मिल के बेचना, this is acceptable as a business proposition. But in profit maximization के concept से 100 ml मिल्क में 1 लीटर वाटर मिल आके बेचने का ट्राई कर रहे and you are saying that my objective is profit maximization, then it is ignoring your social and moral obligation, isn't it or not? राइस में स्टोन्स मिलाना, मिलके बेचना, मगर स्टोन्स में राइस मिलके बेचते बोले तो कैसा रहता? वैसा चीज है यहां पे भी, राइट? सो in the name of profit maximization, please don't ignore your social and moral obligations, but as an objective, only this objective means, then in the limitations what we are saying, it ignores the social and moral obligations. In the advantages what we are saying, only profit, good profit making firms only can do the what you call pursue the social obligations. Hence, profit maximization is viewed as a limited objective which is essential but not sufficient. So, necessarily you need to have the proper, what is it? Profit maximization as an objective, but you should not get satisfied with that. It is only a limited objective and not a sufficient. What is wealth maximization? The objective of a firm should to maximize the value or the wealth. Wealth or the value of the business entity is represented by the market price of the share. What do you mean by market price, and what is market price, and it is a function of what? Market price is a function of likely earnings per share of the business entity and its capitalization rate. What is the earnings and what is the capitalization rate? That will decide the market value of the share. Market value of the share, how you are going to calculate, friends? What is the earnings per share divided by capitalization rate will give you the what you call market value of the share. I will tell you a small example. Aditya and Company, EPS is 20 rupees. And then Shashank and Company, EPS is 20 rupees only. But both may not have same market value. Why? The shareholders of Aditya and Company, their capitalization rate means what? Expectation is what? Expectation is that, say 10%. 20 divided by 10 into 100. 20 divided by 10 into 100, how much it is? 200. This is the market value of the share of whom? Whom? Aditya. Let us suppose the investor in the Shashank and Company, his expectation is 20%. So the same EPS of 20 will be divided with the 20 multiplied by 100. 20 divided by 20 into 100 is how much? 100 rupees. Although both the companies have got same EPS, their market values are differing because capitalization rates are different. Capitalization rate is nothing but the expected rate of earnings. So the point here is, if at all you want to increase the what you call market value of the share, तुम क्या करना पड़ता? The capitalization rate को कम कराना. जब कम कर सकते हैं आप कैपिटलाइजेशन रेट को, एक्सपेक्टेशन को जब कम कर सकते हैं, when you bring a feeling in others that the risk is less. So if the risk is less, expectation is less. So once you are able to keep in the other minds, in the other person's mind, the risk is less, then his expectations will be less. Naturally, the market value will go up, because in the denominator, if the what you call value is less, fraction value will get increased is the point. So the whole lot of the game is what? How do you increase the market value, or market value is the function of what factors? One is EPS, another is the capitalization rate. What do you mean by capitalization rate? It is the expected rate of earnings by the investors. Investors' expected rate of earning is nothing but the capitalization rate. So market value gets decided by the what you call the EPS and the capitalization rates. So this value of the entity is equal to earnings per share divided by capitalization rate. EPS depends upon the assessment as to how profitability of the company is going to operate in future or what is likely to earn against each of its ordinary share. Capitalization rate means what? Cumulative result of assessment of the various shareholders regarding the risk and other qualitative factors of the company. The rate reflects the liking of the investors for the company. Superiority of wealth maximization objective. Yes, as an objective, wealth maximization is a very good objective. Wealth maximization objective takes into account what? Future cash inflows, dividends, earnings per share, whereas profit maximization objective do not recognize the effect of the future cash flows, dividend decisions and the earnings per share. That is the reason why wealth maximization is a broader view and a broader objective. And a firm with profit maximization objective may refrain from payment of dividends to its shareholders, or the firm with wealth maximization objective may pay a regular dividend to its shareholders. Profit ज़्यादा करना बोल के continuously the finance manager is trying to convince the shareholders that this year also please don't ask for the dividends. We will make use of that funds also to be invested in the business only. In business को ज़्यादा ऊपर ले लेते बोल के dividend payout में उन्होंने less thrust लगाते, whereas wealth maximization जो है वो objective में क्या है? कमाना और कुछ investors को भी देना, कुछ retain करना और आगे बढ़ जाना. तो a firm with profit maximization objective may refrain from payment of the dividends to its shareholders, or a firm with wealth maximization objective may pay regular dividend to its shareholders. Shareholders prefer to increase in the firm's wealth as against a mere increase in the flow of profits. So the point here is why we are saying wealth maximization objective is superior, because shareholders are not only interested in what the profits that the company is making, but also they are interested in increase in their share values also. And increase in the share values is possible only with the wealth maximization as an objective. Then shareholders prefers a firm to use its funds effectively. A firm which is able to generate higher rate of return on its own retained funds may be able to increase the wealth and the value. If the firm had distributed its profits by way of dividend, the rate of earnings may not be high. So where there is a possibility that the concern can generate more returns with the what you call own funds and the retained profits, then naturally the value of that particular company share will get increased. Hence wealth maximization is a better objective for a business, since it represents both return as well as risk, whereas profit maximization do not consider what you call all these aspects of risk, return, future inflows, dividend payout, EPS. These things which really matters in a financial market are not being viewed by the profit maximization objective. So on that context we say profit maximization is a wealth maximization is a broader view and a superior view than the what you call profit maximization. With that, today I will conclude.